Hi everyone, I have a new preferred scenario on the low time frame. So in this video, let's go through the medium time frame and the low time frame scenarios, including potential trading setups. Starting with the medium time frame very bullish scenario, where wave 1 is already in on the high time frame, wave 2 is in, and we are now working on a big impulsive move to the upside, with then the medium time frame count being a lower degree wave 1, 2, for then a big push to the upside in a wave 3, and then actually lower again. This is then another 1, 2, expecting another big push to the upside. However, there is 3 reasons why this scenario for me is an alternative and not a preferred scenario. First of all, wave 2 ended at the 0.236 fib time, taken from the low of 1 at basically 15.4k to the high of 1. And usually wave 2 has a minimum fib time target of the 0.382. But as you can see, there's a big difference between the low of 2 and the 382. So this is extremely rare, and I don't think I've ever seen it before. Then if we look at the volume at the moment is dying. And if this is a 1, 2 and then another 1, 2 for then a bigger 3, one would expect volume to at least be quite stable, because we want to push all the way to the upside. But as you can see, we make higher highs, but definitely on the volume, we are making lower highs, which is not too bullish. And lastly, this wave 2 over here in green, if we zoom in just a little bit, you can see that this wave 2 did not actually hit the 382 Fibonacci, taken from the low of this green 1 to the high of the green 1, which usually is a already rare but minimum target for a wave 2. And because it has not reached that target, for me this scenario therefore is very alternative. The more preferred scenario is both bullish and bearish, depending on the count that you're following on the high time frame. Because over here, the high time frame wave 1 is ending with then a 1, 2, 3, 4, and now working on a wave 5 over here, which is then either in the bullish scenario a yellow wave 1 followed by a 2 and then a 3 to the upside, or in the bearish high time frame scenario, this is the end of X and we're looking for a lot more downside to come. Prices of at least 13, 12, 10, 9k. Now in this scenario, what we're looking at on the medium time frame is a 1, 2, 3, 4, and then eventually 5 ending somewhere in this target area. This is the target area for a wave 5, the most common one at least, between the 1.236 and the 1.618, which is between 26.8k and 29.6k. These fibs are taken from the high of 3 to the low of 4, and as you can see, we are currently ranging in this area. And a potential trading setup in this scenario, which is currently my preferred, is having potential short setups over here, laddering, stop loss somewhere safely beyond, and trading it to the downside. This area also has nice confluence, actually a little bit higher of where price is at the moment. We have the high time frame range value area low, the 1.618 wave 5 target, and also the 1.618 level at 29.6k has a very important wave X target on the high time frame as well. So this area over here is very interesting for a potential short trade, where then depending on these scenarios, we are looking for wave 2 targets, where this wave 2 on the high time frame, this then being a 1, 2, most common target for wave 2 is the golden pocket between the 618 and the 66, which starts at about 19.8k. Also great confluence with this low for some extra liquidity in case price comes down, takes the liquidity and then moves to the upside. However, the minimum target for a wave 2 is the 0.5 usually, and a rare target is the 0.382. So the 0.5 starts at 21.4k for then a potential long setup to the upside in a wave 2 for then a wave 3 to the upside. Or we go down even further for a wave Y, and this potential short setup becomes a very, very big swing trade. If we then go to the lower time frame, I will start with my preferred scenario at the moment, where we are in a ending diagonal. Now this ending diagonal so far fits all the rules. The end of wave 4 in this last leg of the impulse over here, 1, 2, 3, 4, and now working on 5, works so far very nicely, where this first wave can then be a 3-wave structure followed by a 3-wave in wave 2, hitting the 0.786, which is a common target for a wave 2 in an ending diagonal, then followed by another 3-wave structure in wave 3. Now this does look a little bit impulsive compared to then maybe this in a wave 3. This looks more like a 3-wave structure. You have to really force it to see a zigzag in here. So this wave 3 might not be the most brilliant wave 3, but so far it works, with this then being the first, second and the third wave in a wave 3. It did hit the target of a wave 3 perfectly. The most common target of a wave 3 in an ending diagonal is between the 786 and the 886 as well, and as you can see, we wicked inside that area and did not even close a 15-minute candle in there. Then currently working on the wave 4, or wave 4 is already finished. So the most common targets for wave 4 are the 382 and the 0.5 in an ending diagonal, with the golden pocket over here being a more rare target and the 786 and the 886 being very rare targets. So when we look at this scenario, well, do we expect a bit more downside to maybe take these lows? Possibly, because if we take a look at the CVD divergences, there's some stuff going on. So very, very locally, if we zoom in, you can see the high over here. Now this high that I'm pointing at right now is, let me zoom in, is this high over here. That's incorrect. It's this high. Excuse me. So that is here at 7, basically made yesterday. So this high over here is this high over here. And then you can see we have a lower high in price, lower high in price, but we have a higher high on the CVD line. So a lower high in price, but a higher high in CVD. That is a bearish divergence for possibly more downside. However, do not forget that we also still have bullish divergences that on this AGGR chart, which you can find the link in my Discord, has not yet played out, because over here we have made a high, a low. So we have a higher low, but a lower low on the CVD. And on this chart, this high over here did not take this high. However, on the price chart, we actually did. This high over here took this previous high. So that is very interesting. So we have both bullish and bearish scenarios. And what I would actually like to see is maybe see some downside to take the liquidity over here. So basically have the bearish divergences play out to the downside and then a move to the upside, which would also very nicely match the potential target box that I have over here with a daily, the range value area low over here as well, and the golden pocket all around this area, the golden pocket taken from this low to this high. So that is quite a nice support area to then move to the upside. But of course, price can also just move to the upside right now, because it did hit the minimum target, which is the 0.382, right? So it could move to the upside for then a potential short scenario. Here over here, you can see that now the targets for this wave 5 actually look very nice. The most common target for wave 5, the 0.618 in an ending diagonal, matches quite perfectly with the high time frame range value area low. And if I remove the target boxes, you can see the more rare targets over here of a potential wave 5. The invalidation for this wave 5 is if price would touch the 1-to-1, which currently sits at 29.4K. In this scenario, the potential trading setup would be to start laddering a short setup from the 0.618, or basically the high time frame range value area low. Stop loss at the invalidation, because it is the invalidation. You can always have a little bit of leeway, in my opinion, better be safe than sorry, and then trading it to the downside. If I then go to my alternative scenarios, then the alternative scenarios basically have wave 5 already finished. So I have no idea what those red lines are here at the moment. Oops, there we go. So in this scenario, we have a wave 5 already finished. We have a yellow 1, 2, followed by a blue 1, 2, 3, 4, 5. That is then the end of 3. We have 4, and we then have 5, with 4 hitting the 0.236 from the low of 2 to the high of 3, which is a bit more rare, but possible, and a potential zigzag then in this wave 4. And then wave 5 over here is already in with a bit of an impulse. And in this scenario, I'd be looking for a 3-wave in A, a 3-wave in wave B for an expanded flat, and then a move to the downside. So the short trade up is actually quite similar, because it's still a potential short setup in this area. Most common target for wave B is between the 1.236 and the 1.38, with the 1.38 being 29K basically. So potential short setup is laddering the shorts over here, stop loss somewhere safely above, trading it to the downside, but then for a potential wave C to the downside. And if we then show my other alternative scenario, then over here we could be looking for again the end of a wave 5. We are now in a corrective structure, with this then being a 3-wave in the W, a potential 3-wave in the X, and then another 3-wave in Y, which can then be the beginning of an expanded flat, because then these 3 waves are an A, followed by a 3-wave in the B, again an expanded flat for C. The reason I'm looking for expanded flats is because so far we have not hit this resistance area, which I think is going to be a very important area to touch, and I would like to see it touch basically. So that is why my scenarios, in case wave 5 is already in and we are corrective, are expanded flats, so that we can touch this area for then a move to the downside. So yeah, this is what I wanted to say. I hope this video was helpful or valuable to you. Thank you for watching and subscribing, and I will see you at my next video. Bye bye.